May we request everyone to please wear your headphones. Welcome to the next session, which is a panel discussion on liberalizing cross-border payments. Our moderator for this session is Mr. Rajesh Desai, Director at Lyra Network, and our panelists for this session, Reeju Dutta, Co-founder Cashfree Payments, Somnath Mukherjee, AVP Business at Zerodha, Anthony Petrilli, CEO of ViewTrade, Ronit, Head of International Stocks at Groww, Viram Shah, CEO and co-founder at Vested Finance, and Prakash Venkatramani, Senior Director, Global Payments, India, Flywire. We begin with the panel discussion, and over to you, sir.
Yeah, thank you for the introduction. Ladies and gentlemen, thank you so much for coming over here. It's very bad and hard traffic outside, but I'm happy I can see a lot of faces out here. Thank you so much for coming over here. Thank you to all the panelists, Anthony, Reeju, Ronit, Prakash, Somnath, Viram. Thank you so much for being here. I'm sure this is going to be a very interesting session, an intellectually stimulating session as well. I look forward for some spirited discussion and some great thoughts, views from your side. Right? Thank you so much. If I can set the context and if I can set the tone for this session, for this discussion, India has the world's largest diaspora. There are about 32 million of NRIs and OCIs who reside out of India, which technically means India is the largest nation of receiving remittances globally. If you look at World Bank, it states in 2021, India received US dollars 87 billion, which actually translates into a multi-billion dollar industry for India. And for every developing economy like India, I think remittances inward, outward plays a very, very important critical role, right? So before we get into this intense discussion, maybe I can ask all the panelists out here, all the 6 panelists out here, to share some opening thoughts, probably some thoughts on what has transpired or what has changed in the last coming years in terms of cross-border remittances. Maybe you can start first, yeah.
Sure. Hi, this is Reeju. So I think, so I'm from Cashfree and we're a payment aggregator. What has changed over the last, let's say, 2 or 3 years, what we have seen, and it goes with the topic of the conversation, liberalizing cross-border remittances, right? So what we have seen is the regulator, I think, has been more pushing for involvement of other fintech players or financial service providers in the traditionally very tightly regulated regulant space, cross-border remittance space. So earlier you had only AD1s or AD2s who were authorized to do these transactions, and that is still the case. Only AD1s and AD2s can do that, the authorized dealers. But right now I think there is paths, the regulator is allowing or encouraging fintech players to partner with these regulated entities like AD1s and AD2s and provide services which make it easier for making these cross-border remittances. And the ease comes in the form of much lower costs, faster movement of money, and also the documentation that is associated with cross-border remittances, right? Since it's international transactions, there is more compliance as compared to a traditional domestic transaction. So I think the documentation is becoming digital, and that is a very key process that is change that is happening over the last 3-4 years. So yeah, based on that, and I think all of the panelists here are probably have some use cases which involves Indians sending money outside the country and vice versa, and I think
thanks Rajesh for having me here. Privilege and an honor to be part of the session with esteemed panelists. I think purely from a cross-border remittance perspective, I generally see that as India is becoming a larger economy, the activity around cross-border remittances is increased manifold. Everybody knows that India is one of the largest market in terms of inward remittances, typically in the top 3, with China and Philippines being there in those ranks, and India receives roughly about $80 billion inward. What's interesting that has happened is the activity around outward remittances in India. So with the economy growing, over the last 4-5 years, you see activity around outward remittances, which earlier used to only happen probably around education. Now you see activity around Indians buying property abroad, Indians investing in stocks abroad. Money moving from India to a close relative abroad. And what happens is that this economic activity is highly underrated, because what I feel is that in a lot of ways, cross-border remittances is connected to, it's actually a forerunner to economic development, because you have Indians who are who want to immigrate abroad. There are Indians who want to go abroad for education. They go there, they become white collar workers and blue collar workers, and they are the ones who are sending money back into India. And in a lot of ways, that's super important for India, because that's the money which is being used for economic activity in India.
Great, thank you.
Nice to be here. And hi, I'm Viram. So for us, I mean, we started our journey as an investment platform, and then along the way, were forced to become a cross-border payments provider as well, because there was no solution. And like it was mentioned earlier, right, we work in the outward remittance space. And so as we've solved this over time, we've developed some understanding of how cross-border works. And you can break it down pretty much into two large buckets, which is outward and inward, right? And so inward has been largely solved. Outward, though, is something that is a big opportunity. And the way we look at it is kind of three buckets, which is three axes in which there needs to be improvement. One is time for the transaction to take place. Second is cost. How much does a customer need to pay? And then the third is the effort required, right? How many steps do you need to take to be able to transact internationally and send your money outward, right? And so within outward, you have current account, the way RBI looks at it, which is education, travel. All of these are decent. So from a business standpoint, an opportunity standpoint, there's like a 2x, 3x improvement opportunity along these three axes of time, cost, and effort. The bigger opportunity is on the capital account, the way RBI looks at it, which is your investments, which is moving money into bank accounts internationally, all of those things, right? And so that's where we've been operating. When we started the vested journey, I remember the first brokerage account, my own brokerage account that I opened, I had to go to a Axis Bank branch in like the rainy weather in Mumbai, fill up 5 forms, which are 10 pages long, pay 3,000 rupees. It took 3 days for the money to come in. From there to now, in terms of international investing, money comes in instantly with no fixed fee, and the effort taken is just 3 steps, right? So all online. So that's been a massive improvement, and I think there is another 5-10x improvement that will come in over the next few years as sort of multiple players look to improve the ecosystem, right, and look to provide more investment opportunities internationally.
Thank you, Viram.
Hi everyone, my name is Ronit, and thank you Rajesh for hosting us today. My fellow panelists has already summarized, some of the directions at which the fintech industry on the LRS side, and also the LRS system improvisation that has been happening over the past couple of years has been happening. So one thing that, from my perception or from the learnings that we have seen so far, is with the enhanced processing of remittances, be it inward, be it outward, process, cost, we see, or we expect, and rather expectation, we see a lot of retailers' participation coming into picture. So far, it's been like, deep ticket size, bigger institutes, doing their remittances via banks or say via any other channel partners, interfaces, etc. Now, with investments and broader use case of remittances, we see retail participation supporting that ecosystem all in all. And this is where a business growth lies. And this is where a business growth in terms of overall remittances as a business and overall, a Forex business lies for fintech players like anybody out here in the country today. And in order to make this, or in order to take this in the next phase, obviously there are participants like the bank, the payment aggregator, payment gateways, the platforms who are providing the end user support, and obviously the customers. So we got to build a bridge which is very seamless, be it for any reasons, right? It is just not just for an investment space or for education, but yes, all in all, it's like, whenever there's an investment happening, outside and inside of the retail or the institutional working space. It has to be very seamless and very cost effective. And that's the direction that I think most of us are working towards.
Thank you, Ronit. Somnath, your thoughts?
Hey, happy to be here today. I'm Somnath from Zerodha. And this last 6 years that I've been tracking this space, I've seen a lot of changes that have come in, especially in the, the remittance, the outward remittance side of things. Like 6 years back, if I had to see the RBI regulations on, what would guide us for LRS guidelines, it was just that one line that was there, the limit. And there was, I think, one FAQ with a few do's and don'ts. But now, through the years, I think about a month back, RBI revamped the ODI regulations after about 20, 30 years. Also, RBI is kind of encouraging startups to kind of provide solutions in this space. They had this regulatory sandbox where there were multiple cohorts providing solutions in the space. There's also the gift city, which has come up, like a separate jurisdiction, which is encouraging only, kind of encouraging this, whether it's inbound and outward. So yeah, a lot of things happening. Plus Indians, they're probably spending the highest amounts of money when it comes to travel, education, investing. So yeah, a lot of changes that I've seen personally in this space.
Great. Tony, your thoughts?
Yes, I'm Tony from ViewTrade, and I represent the receiver side of the cross-border remittance. And one of the things to always bear in mind, and sometimes it's forgotten when you're looking in-country only for solutions, is cross-border by definitions means your partner on the other side. And we have the same issues, many of the same issues and concerns that we have to address. We're regulated in terms of receiving money from an investment or a brokerage perspective. We have to have many of the same issues that are trying to be addressed here. We have to address and coordinate that and having partners that we can work with to coordinate those efforts and making sure all our needs are being addressed. And doing it, as was said very well, cost effectively, instant, and seamless as possible is critical. And some of those things, in fact, have begun. We're seeing that here from India. India's been a huge market, small opportunity because of the friction that's been involved in trying to bring money to the United States for investment purposes. Some of these efforts that have just been mentioned here is exactly what we're hoping to see. And we want to be a participant in helping that happen.
Thank you so much. I mean, always feels, we are very proud when we see a set of panelists, who come from diverse backgrounds, probably from the same background, but then they have a common objective of having a very secure, streamlined future for the future, platform for the future, which is very efficient. I mean, that's what we are narrowing towards. So without much further ado, let me pose the first question to Reeju. Reeju, I mean, what do you think are the current challenges in the current landscape when it comes to cross-border payments?
Got it. Yeah, so I think, as I said, right, like the challenges are the ones that we're trying to solve, I think, and some of them were already mentioned, right? So one of the first challenges that came in processing LRS payments was that you only had to do that through the bank. And what that usually meant was, and this especially holds true for capital account transactions under the LRS, which is, investing in stocks and all, right? Similar stocks, securities, and other assets. So there I think you have to go to the bank, which usually involves a paper form, and sometimes the bank comes up at your doorstep. The mode of transaction can only be a SWIFT, and it's a one-off transaction, right? So the costs associated are much higher. So let's say if you are trying to invest in a stock, it's very difficult for someone to invest 1,000 rupees, 2,000 rupees, right? Because the processing cost itself is maybe 2,000 rupees at least. Right, so that is one of the major challenges that is there. Then the documentation that is there was digital, was not digital, right? And hence all the paper signing that had to happen, and also the money, usually took much longer to kind of reach the destination, right? And reflect in your account and be available to invest in an actual stock. So that is a very specific one to LRS capital transactions that has been there. So the big change there, as I think the sandbox was also mentioned, right? So so RBI gave out, was pretty open to the idea of if an aggregator, being able to process these LRS capital transactions and kind of being able to achieve efficiencies in the documentation. For example, in documentation, we are exploring a CKYC kind of a flow, which is supposed to be a pretty the most advanced, of all the KYC flows for documentation, and it's a bulk aggregated kind of a settlement, so you save immensely on cost, right? It can be more than 50% lesser than what we are paying now, probably even more, and so even on the FX as well. Right, and then the speed of settlement is next day. We're trying to get it down to the same day, right? So that's like a gist of the challenges, and it's the same kind of trend in LRS capital as well as current accounts, right? Current is majorly travel and education. So just to give a number, right, it's $20 billion or $24 billion annually. That's the processing volume of LRS payments, and around 30% each is education and travel, and they're the two largest segments, and growing around 20% annually for the last five years, right? So that's a sense of the market. And LRS capital, I think we have a lot of players from that, is around 5% of this, but it is the fastest growing one. So I think in the last 1 or 2 years, it has grown 340%, and the pandemic has to do with that. But yeah, I think it's the fastest growing one, so that's just a sense, right?
Right, I agree. While the quantum of remittance depends upon a lot of multiple factors, but then cost becomes a very key element, So my question to Ronit probably is around this. So what do you do to take this to the next level now? I'm sure there's a lot of scope for improvement in terms of speed, in terms of cost, but what do you do to take it to the next level?
Right. So, so just like Reeju has mentioned, there are layers from starting from a customer level when he initiates the transaction, the cost level that comes at a banking level, and then obviously at a clearing side when the funds are actually out of the country, and then obviously at the receiving side of the US counterpart, for be it any reason. So the way I see it is, it has to be in a more in a more process-wise journey. First, you need to kind of automate the process. So when I talk about automation, the process, these are the checks that is being done at a bank level to understand whether whether is this customer genuine, the source of funds, proof of funds, or if there's any kind of account inactivity with respect to the funds, etc., that typically an AD bank does. So that process has to be automated as a step one, and we see industry taking the steps towards that direction. And then secondly is like pooling the funds instead of doing a direct one-on-one SWIFT transaction or which ideally incurs the direct charges onto the customer. It's better to pool the funds, as long as of course there is reporting challenges which also needs to be addressed, and all these things has to be addressed together. It's not that it's just one entity doing it. So obviously RBI as a whole will bless the process when we are following the correct protocol, whether we are pooling the funds, remitting outside, be it for any process, be it for any source code. But as long as we are able to put these puzzles in its places, right? Starting from acquiring the information, KYC part of the customers, to the bank account analysis part of the customers, sending it to the banks for processing it, enabling the banks to make sure they have an automated process to manage scale. So when we think, when we think of growth as a business, we always think of scale. So is the current ecosystem ready for that scale or not? And if suppose it is not, what needs to be done to reach that X+1 or X+N kind of scale? So process automation, cost control, and a user experience is something that needs to be done starting from the fintech level as a platform to the aggregators or to the statement providers, to the banks, and at the end to the US receiving end. So it's a work in process. I see a lot of people doing it, and there are many people over here who are part of the ecosystem. It's just a matter of time that we are kind of democratizing it in a more broader way, instead of just keeping it a niche. So that's the bigger picture that all of us are seeing, and I think it's just about time that we reach there.
Okay, thank you so much. So let me shift the discussion a bit towards regulatory developments. Somnath, my question to you would be, what can the government do in terms of regulatory developments, in order to cost optimize it or to make it more convenient in terms of outward as well as inward remittances?
Right. So I think there are two aspects to kind of making this go to the next level. I think one is what Ronit mentioned on the costs, the process, that side of things, and I think RBI has come a long way in solving that. I think one side is the regulatory side, which is kind of not clear yet. Like I think one clear guidance needs to come from RBI because they're kind of the controller for remittances, and one maybe from SEBI also because they're the ones looking at investments and asset classes and around that aspect. So I think one thing from RBI, even though the encouraging bringing this cohort, enabling this mode of collection of pool account and then kind of remitting it kind of has reduced costs, but on ground, we still see banks, are kind of scared to market these services because, marketing services to easily kind of enable outward remittance is something which a lot of countries don't look, positively about. Like, say, China has kind of curbed a lot of things. India also, we don't know the clear stance of what RBI thinks. 2 weeks back, we saw this video from Miss Madhabi Puribach from SEBI. She came out and gave out, a clear guidance on how brokers and SEBI intermediaries should look at futures and options. So, it's not like a written code that they came out with, but at least that clear thought process on how businesses should align when it comes to such a vertical. We at least got that. So I think something like that from RBI needs to come so that, currently the LRs is at 250K per year, $250,000. So if they say up to $100,000, we won't, bat an eyelid. You can do, clients can do whatever they want. Banks can market their services. But up to 100,000, if the source of funds are okay, if everything's okay, you can do whatever. If something like that comes, it becomes easier for the banks also, I think, to kind of partner with other players and, bring out like a clear picture. Another thing is from the SEBI side again is, we're a regulated broker. So what can brokers provide, like, maybe some platform guidelines or, referral guidelines on, whether whether, say, international investing can be made easy for regulated brokers. Like, because if you see the last 1-2 years, there have been a lot of negative sort of vibes when it comes to brokers enabling other sort of products. Especially, recently they came out with guidelines like if you have an associate NBFC, you can't promote lending against shares also for a broker. Last year, digital gold was kind of taken away, whether cryptocurrency can be sold or not. Brokers are kind of losing out on, such unregulated plays. Even last year, actually, mutual funds were kind of stopped to take international funds in the international schemes because there was some threshold from RBI which the whole industry had hit. All international schemes had to be stopped by AMCs. So things like that are not allowing us to be clear in our stance also. So I think that's something, like a guidance needs to be provided.
Okay, sounds great. Prakash, now with central bank allowing third-party entities to become a part of the customer-facing, leg on the floor, how do you think fintechs and financial institutes should revamp the way technology is to be used?
Yeah. So, taking just 5 steps back, so India has always been traditionally seen as a fairly regulated market when it comes to cross-border payments. So, and not as regulated as China, where you only have to use Alipay or WeChat Pay to collect funds, but still reasonably regulated. Now, that started changing with RBI setting up cohorts to experiment on the cross-border payment space. And a lot of those cohorts actually moved on to an approval from Reserve Bank of India to make that product live, which is, I think, has been a very, very future-looking decision and direction by the Reserve Bank of India. Now, because you have already started seeing the results of it, and there is products being created as we speak. Now, at this point in time, I feel that positive direction has gone to a level where fintechs and payment companies have taken cognizance of the fact that this probably might be the UPI moment in cross-border payments. I am saying this because, similar thing happened in UK and Europe some time back when there was a Payment Service Directive 4, which was sort of, which was put in place, and that led to a plethora of activities around open banking. So in UK, if you ask me, post the PSD4, there was a bunch of fintechs who who could use an API stack of the large banks in UK, like the Barclays or the HSBCs of the world, and create their own products. I see a similar thing happening around cross-border payments in India. I see fintechs, payment companies working very closely with the banks and moving that tech stack that they have built in two major directions. There is money going out of the country. So there's, at the end of the day, there is money in India which is going to US or Canada or Australia, whatever destination that you might have in mind. How do you make that simpler, easier? Yeah. So you at the end of that stack, there might be a large regulated entity which might be a bank, but as a fintech and a payment company, you are probably creating a product which is going to make that payment experience much more smoother. So that is one direction that I see, where companies are going to invest their tech stack in building a fast, smoother journey. 4 clicks and your transaction is done. Now, we are slightly away from that, but I think companies would start putting their stack together in that direction. So that's one part of it. The other, which has always been a bone of contention in cross-border payments, is the KYC element. Now, we have strong directions from RBI as to what the KYC checks need to be. So, because a lot of fintechs work with banks who are regulated entities, they are supposed to do a part of the KYC, and the banks also have to do a KYC. Yeah. And the other part of that tech stack that, I see payment companies focus on is how easily and quickly you are doing this KYC checks. Because one is you've built a fantastic customer experience and you merge that with a fantastic low-touch KYC check process, and you have got a brilliant product. I see a lot of payment companies, players in the ecosystem doing that right now.
Great. Sounds good, Prakash. Let me come to you, Anthony. I mean, you have a different background and different perspective, but I guess you're different from the rest. You represent the US brokers and the technology service providers receiving remittances. I think the audience will love to hear from you in terms of what are the historical challenges you have been facing to support Indian investors who want to invest in the United States.
Yeah, thank you. I mean, the classic way to phrase it, if anyone in this audience wants to invest $100 in Apple, wouldn't you like to see $100 show up in your US brokerage account to buy Apple? Yeah, the answer is yes. The answer is that's not going to happen. And the biggest problem in this process has been not the technology that these brokers have or that are available to brokers globally, quite frankly, worldwide. We all know how to do digital things. We know how to use technology to make things efficient. It's the cross-border payment where the problem has been. And so what happens today is, yes, you're going to pay a $15 SWIFT fee on this side. You'll pay a bank service charge on this side. So now let's assume your $100 is now $75. Money shows up in the US. Guess what I have to pay? $10 for the SWIFT to receive the SWIFT wire. I got to then pay for a KYC check. Come on. I mean, so what ends up happening is, and this is why I said, huge market, small opportunity, because you as an investor are smart. You're not looking to have $100 turn into a $30 cost, which equals a $30 loss before you even begin investing. You're not going to do that, right? And that has to go to zero, right? We can't, and by the way, the FX, okay? But let's assume the FX is always going to be there, and that really, probably is the element that should be the cost of a cross-border payment is the FX element, but that should be as tight as possible as well. But all these other fees are due to friction, due to, I'll say, business models of banks and others that have taken advantage of it. And my view is make it smaller, you're going to get more volume for sure. I think there's always the desire to invest globally. It does exist. We see it everywhere else. I mean, India is unique because of the size of the investment. I mean, the typical order we would see coming from overseas, our clients overseas today, $20,000, $15,000 per order type of thing. I mean, but from India, it's probably going to be $100, $200, $300 per order. You can't afford the built-in costs. So the sandbox was a critical thing, being able to eliminate sending individual wires, which means individual SWIFT messages that both sides are paying for, turning into a bulk payment. That's all recent, allowing us to digitize the whole process. I mean, I'll give you another example on the US side. If we receive a wire, sometimes we don't know where to post it. Who sent the wire? Because the information doesn't contain the brokerage account, right? We ask for it. There's a field for it. Very often it's sometimes not filled. So then what do? I got to look at a name and an address. So what does that mean? I got to have a person. I mean, so you can just imagine how difficult it's been to try to bring money into the United States, an Indian resident wanting to send money to the US, invest it. It turns into where at the end of the day, the cost of opening the account versus the number that got funded, 10%, meaning we paid all the costs associated with opening the account, let's say 100 accounts, then they go and try to do the movement of funds. They realize how much it costs to move the money. They drop the funding, which means the account is now, we've incurred the funding, the account opening cost, but we're not receiving the funds. So what we call the funding ratio is very, very low. That's going to change with a lot of the things that are happening here in this process. So look, at the end of the day, if you ask me to dream, because I think it's a dream, what could help governments have, how many times do you need to be identified for the very same transaction by how many different people? Their government should figure out, regulators, how do we create a single transaction, a single verification, trust what the Indian regulator has done or what the firm in India has done, right, in terms of verifying who you are, and let that pass all the way through to the United States. Don't have the same transaction incur another cost and another cost just to say, who is Tony? Is Tony a good guy? Should we be sending the money and should we be receiving the money? So those are dreams, and maybe, but that would be wonderful if, because you asked that question earlier to one of the other panelists, can governments just get together and what's the purpose here? This individual who's a resident of this country has been identified as a good sender of money to the United States for investing. That's it, he's been identified, let's all accept that, and we allow and take those costs out of the process and let them have $100 show up in their account in the United States. That would be the ideal.
So in short, dreams turn to reality when you have costs, convenience, and taken care of.
Absolutely.
Great.
It's all possible, just the will to do it.
We'll see, time will come. My next question to you, Viram, I just mentioned earlier that India is the largest recipient of remittances. But when you look at statistics, outward remittances are absolutely not at par with them, What do you think are the critical reasons for the same? And if this opportunity of outward remittances needs to be converted to a potential opportunity for global companies, what is your suggestion on that?
Yeah, thanks. So, I mean, for context, today inward is, I think, 87 billion, right? And outward is 20 billion. So 1/4 is where we are at in terms of outward versus inward. If you ask me, I don't think that trend is ever going to change. I mean, structurally, if you look at it, we talked about the number of expats, right? About 30 million expats. I think amongst that, half of it is NRIs. So 13, 14 million is NRIs. Now, 30 million is likely the same number of people in India also that will remit abroad, right? That's the number of people who have credit cards, taxpayers, etc. So that's kind of the remittance market that you look at. And now, if you look at the amount that people have in terms of income abroad versus the same 30 million here, it's almost 3 to 4 times abroad, right? So it's very, very unlikely that the 30 million that's remitting outside is going to be able to remit the same amount as it's coming in. That's one thing. The other thing is also, if you look at outward needs, today it's driven by one-off needs. So today it's driven by education and travel primarily. Whereas the inward is more a recurring income that comes in, right? Somebody's making money, they're sending money back to their family and friends. So it's likely to happen over 10, 15 years, whereas I'm traveling once or twice in a year, or I'm studying for 3 or 4 years. After that, the outward doesn't happen, right? So because of this, it's unlikely that it's going to change, and it's good, right? That like India benefits from that for their balance of payment. So while both might increase, it's not necessary that outward will become close to inward. I think one trend though that we see will likely play out, and what we see is essentially right now all of the outward has been consumption driven. It's been travel, it's been education. So those have been the two primary, and I think there is gifting also. Those two, though travel and education, have been the primary sources for sending money abroad. I think that trend will shift to becoming more consumption plus investments. I think that is something that over the next 5 years will play out. It played out in China actually. You see 2 massive companies actually that have come up in terms of Chinese investors investing internationally. And so in India, that's likely also to play out, and that will increase the outward volumes. That will make it more recurring as well, because you might do, let's say, an SIP or things like that when you're investing internationally. but unlikely that they'll come up to the same volume.
Brilliant. Thank you so much. Reeju, my next question to you. There have been so many initiatives, new initiatives being taken by various bodies to broaden this entire landscape when it comes to cross-border payments. RBI has just announced that an NRI can do bill payments using BBPS. That's one initiative. Then you have the initiative of the LRS, the Liberalized Remittance Scheme. Then you also had the government of India along with Lyra network, that's where I am associated with, taking UPI to Europe. We have taken that to France. So with so many initiatives being taken to broaden this entire landscape, do you think that this opens floodgates for players who are in this line of business, for fintechs, financial institutes, and maybe businesses who deal in this cross-border payments?
Yeah, I mean, definitely, right? And that's, I think, the gist of the discussion, right? I think Prakash made a point about the UPI movement for cross-border, right? And how that would look like probably is, let's say, for one, we have Zerodha and Groww here maybe, and everyone else. So I think, like, it would be very easy to, let's say, invest in stocks on multiple apps, right? Multiple fintech apps, I think, right? So that would be one. Secondly, it could be very easy to make, let's say, these cross-border remittances from any kind of third-party app, even WhatsApp for that matter, right? So that's what a UPI moment would look like, right? And what we are trying to solve here today is like, you would have to do a KYC for each payment, right? So just imagine you're doing scanning a UPI QR code and, trying to enter your KYC each time. So that's friction, right? So how do we try to solve that? Yeah, so those are some of the challenges I think we have discussed, right? And like, for instance, one of the ways we try to do it is, make the KYC at a per user level, right? And then not every time you do a transaction. So, right, so that for a repeat transaction, you don't have to, make the KYC every time, apart from, a more digital KYC process, right? So yeah, so that is an example. But yeah, I think to answer the question, right, there is a lot of opportunity, a lot of regulatory tailwind. Fintech players in India, I think, since they have, experienced the Indian market, which is highly innovative and very competitive, I think they're also, prepared. And we have seen a lot of companies, exploring markets outside of India to take the products that they've developed in India. So that's a take, I would say.
Right.
But like just one point, like I think we also need to be kind of wary of the guardrails here, right? Because there's a lot of talk about liberalization, right? But I think the guardrails need to be, in place or in check. And for us, like for LRS in particular, that is the $250K limit that is sacrosanct, right? So I think one of the biggest checks that happens is, is that limit hit or not? So that's where a lot of efforts goes in. So yeah, as system players, I think we have to ensure that, those checks and balances are maintained, right? So that's important, I think.
You have pros and cons everywhere, but I'm sure that with these new improvisations, it will only lead to acceleration of this in this entire landscape. Somnath, I would like to pose the next question to you. Reserve Bank of India intends to roll out the equivalent of a digital currency, rupee, right? Equivalent of that, which is basically India's own digital currency. Of course, this will give a big boost to India's digital economy. But then do you think that this currency will affect costs when it comes to cross-border payments?
So I'm not really sure actually. So I think this would probably help in inclusion, formalizing the economy. In those aspects, it'll definitely help a lot. But when it comes to reducing costs for remittance, I think the current cohort which has got passed, I think that itself is going to reduce the costs a lot. And I think more than that, it might not really encourage banks also to participate because they also need an incentive to kind of bring that into play. So I think lower than this would be kind of really low for, kind of bringing more participants into this. So I'm not really sure how much cost it would reduce. I think we're already going quite low if this kind of passes. So yeah, I think it would really help on the inclusion and the formalizing aspect of the domestic economy more than anything around cross-border remittances.
Okay. Let's hope for the best.
Yeah.
That's what we can say. Ronit, when we speak of mutual funds or trades, you see a lot of restrictions there, and some significant amount of hesitation when it comes to this. What steps do you think that the government of India should take in order to ease out this entire pain?
So of course, the biggest thing is compliance, overall compliance in terms of handling the transaction, handling the settlement, handling the clearing, and the KYC, that we have been initiating a lot. So like when there was a $7 billion mutual fund breach that happened, I think back last year, and that itself shows the intent of investors looking to diversify their products or their portfolio outside of the country to have a more balanced investments, and that's the sense that we have been picking up from the market as well. Be it mutual funds, be it stocks, be it any sort of instruments, ETFs, etc. Diversification has come as a basic need of investing or a financial support system in the country for us. So, I mean, it's basically not keeping the eggs in the same basket. You're just diversifying. So, in order to get to that foreign access, or in order to have that similar kind of experience. So right now, any Indian investor who wishes to invest in stocks, MFs, they directly just do it in like a couple of clicks. You just search for the instrument, you just pick the quantity or you pick the volume, and that's it. It's done. Just 2 clicks and you're done. You want to fund your wallet, you have the UPI mechanism over there, you have the net banking mechanism over there. So it's hardly a matter of 3 to 5 clicks, and that is what has been evolving the market. And the local governance has been supporting this infrastructure in building the local or the domestic market in terms of volume, in terms of market participation from customers, not just a DIY or institutional, but also from retail customers. So it's the same basis or the foundation of the governance that needs to be applied on remittances side as well. So I think we have covered most of the touch points where it is critical. But yes, when it comes to investments in foreign stocks, equities, we can see the regulators and government together coming in and supporting in this initiative. Gift City being the one, recent aspect where any foreign institutions can set up any local institutions who wishes to offer retail clients access to foreign equities. It is more governance. So as a business or as a regulated entity, let's put it from a regulatory side. As a regulated entity, anybody who's regulated either with SEBI or with RBI on any kind of capacity, they're more confident working under those jurisdictions. And from there you start building, right? You start building. The foundation is there. Now you start building. Okay, so now I want to offer my clients, say, a diversification to US stocks. I start off with that. Then I say I want to offer my clients a diversification to other equities, right? So you have exchanges over there working with participants like fintechs who are offering platforms, or any broker dealer in India who is currently offering products in the domestic region. So from a diversification point of view, from a global access point of view, I definitely see the blessings of the regulator and the government together in one way or the other. Cohort, Gift City, and then automation, account aggregator. I would say that's again a big, it's a big pointer, or it's a big contribution to the network. If I have to kind of pass an amount, if I have to say transfer, say X dollars to from my account to any third-party account outside of the country, instead of downloading the account statements, doing a mechanical checks, which itself can be tampered with, right? So it's not full-fledged solution. So account aggregator kind of is one of those bridge that connects data. Right. So there's a data blessing also on the compliance part that is being widely accepted on the entity basis, be it bank, be it any institution, regulated institution. So all these things coming together is kind of building that basket that we are looking at. It's kind of contributing to that diversification that our customers or any customers are, a normal retail and normal Indian resident is looking to diversify. And in doing so, they are comfortable. Okay, this is regulated, or this has the blessing of the government, or this has the regulator blessing. Basically, it's not in the gray region, unlike what gold we have seen, and for some other products. So that gives a lot of comfortness, and that is a direction in which the next initiatives have been taken, and I'm sure it's moving at a more rapid pace than we are thinking about.
Yeah, I'm sure these are great insights and views from all the panels. Viram, if I come to you, Reserve Bank of India, RBI, and the Ministry of Finance, they are pushing trade bodies to push cross-border rupee, cross-border rupee trade. What do you think? Where do you think this is heading? Is this a step towards internationalization of currency, the Indian currency?
Yeah, I think I have a short answer to that. To me, it feels like it's more an opportunistic kind of bet where if you want to protect your currency, and in today's environment, they have a unique opportunity to do trade with certain countries where the traditional uh, payment networks are not working, and so this is an opportunity for you to grow demand for the rupee across the world. Overall, if you look at internationalization, I mean, as much as we would want it as fintechs, it would simplify all our lives. I think it's a long way to go. There are multiple factors that need to be considered if you completely let go of capital controls, right, in India. And does the regulator or the government have the incentive to do that? Like, what if it backfires? Then who is going to be left holding the ball, right? So it's a tough call, which I don't think is going to be made anytime soon. But right now, this is a good step in that direction to essentially plug in sort of some of the weaknesses that we have in the economy, right? By promoting rupee trade.
I would love to see cross-border rupee trade happening in. I mean, it is probably a game changer for India as well. I'm sure of that. Prakash, pandemic is something which everybody speaks of, and pandemic has changed the way things have worked out, has changed how we live, Has it in any way impacted, or is there a post-pandemic impact on cross-border remittances?
Yeah. On a lighter note, the first thing that happened after the pandemic is, regulated entities started using this organization called DocuSign in a very, very big way. But the more important bit is, I saw a lot of direction towards digitization in multiple ways. There would be legacy regulated entities who were traditionally acquiring customers in a very brick and mortar way, and they started thinking digital. How do we sort of build a model where probably the acquiring bit of the transaction can happen online and the servicing is still back end, I saw that omni-channel model getting set up in India. I saw a lot of use cases around it. I've seen regulated entities who've been fairly archaic in the way they have acquired customers, changing that stance into acquiring customers through social media, digital channels like search, all of that. So that was one thing which has happened. The other thing that I've seen happening is, especially when in case of foreign exchange and cross-border remittances, there was a service center model which started cropping up. I wouldn't call that as a customer support or call center sort of approach, simply because these service excellence centers were critically supporting payments and transactions at a fundamental level. So there would be a transaction which would have got acquired at a digital level where probably he has completed about 60% of the transaction, whether INR part has come in, a certain degree of KYC checks has been done, all of that, but there is still 20-30% which is left, and these can be very, very large transactions, especially since I work in the education payment space. These transactions can be $60,000-$70,000, right? And I saw that movement within the payment companies where they started investing in these service excellence centers, because that probably would mean that if your completion rates are like 30%, it would probably move to about 70-75%. And sometimes when we talk about business and we talk about business models which are getting set up, we try to we don't probably give due importance to these service excellence centers because they're the ones who are at the back end trying to support transaction. But I saw this movement towards getting that basic fundamental support going into a service excellence center model. So that's the other bit that I saw. The last bit is the sheer innovation which happened post the pandemic. So I remember a friend of mine who set up an NBFC and he was focused in lending and BNPL. He saw this opportunity to tie up with educational institutes abroad, and because he saw there is a massive demand cropping up on online education, right? And he actually went across to education, and he's actually recently got a Series B done, and he actually went to multiple geographies, tied up with universities, and started creating product which was around BNPL. So, there would be consumption that a student would enroll for a course and he would be funding that education through the BNPL model. Not only did he do that, he actually went into details of how he would settle the funds to the university. And that's where the conversation happened between me and him. And, there would be a funding which would be done by the NBFC, and there would be a cross-border payment. So he created this entire model, starting from offering, getting into the universities, creating a product, creating a BNPL product, and going to the end part of, solving for the cross-border remittance as well. So that was, so I saw that innovation happening. I saw a lot of innovation happening even in things like how taxes are collected on transaction. India is a well-taxed country that way, and cross-border remittances attract something called a tax collected at source and tax deducted at source, GST, all of that, right? And I saw companies, and that's a fairly decent component when you are sending, say, $20,000 or $30,000. I saw companies and fintechs and payment companies sit with their teams to see how fundamentally they will collect these taxes and how they would probably pay to the government. I saw a lot of innovation happening there, so which was heartening to see. Not many people talk about taxes and how complicated they are in India, and so I saw a lot of innovation around it. I don't know how many of us probably know there is this category of visa called EB-5 where you invest in a company in US and over a period of time your family gets naturalized to a US citizenship, and you need to actually send about $300,000 for that. And the limit in India is $250,000. I saw companies create products where $300,000 could be split between families, and these transactions could be executed. So that's the level of innovation which came about due to the pandemic.
Great, sounds great. As we come towards the end of our session, I think the last question, last but not least, to Anthony. Now, so this liberalization, how do you think has helped you in terms of making it easier for you to do cross-border remittances? And what do you think are the next steps to take forward?
I mean, many of the things we've talked about. I have to say, what's been happening recently, particularly recently as the sandbox, is all positive. It's making things modern, if I can say that, right? So, look, at the end of the day, everyone on this panel solves problems. That's what a business by definition is, a problem solver. That's what we do for a living. We identify an issue, we fix the issue, we innovate, right, to solve these issues. We're good at that as a group. I'm not saying us, I'm saying all of us. Anyone who's an entrepreneur, anyone who's trying to solve problems, is in this business of fintech, is trying to solve problems. That's the nature of our business. I would say, look, if I can recommend, when government gets together and works with the industry, yes, work with the banks, work with the incumbents, work with the innovators, bring them into the table, because they've got to all be heard. And that's one of the things that I don't think happens often enough globally. It's not unique to here, it's global. And one thing I know working globally, it's all the same. There is no real difference. It's just who's doing it and how fast it happens and how comfortable they can get, how quickly they can get comfortable with the end result. So, but all these things that are happening here are wonderful. I think it's opening up the opportunities that we all knew the demand is there. It's creating the opportunity for all of us to capture that opportunity, and at the end of the day, to benefit the Indian resident, what they're trying to accomplish. At the end of the day, that's what this is all about. And I think anyone on this panel will agree, this is about the customer. It's not about us. The customer is the beneficiary of all of these innovations, all of this progressive thinking, all this modernization that's taking place in India. And I think we're all going to be better off for it at the end.
Right, Anthony, thank you so much. And thank you so much to all the panelists for this wonderful, intense session. I'm sure the audience enjoyed it a lot. Let's hope that this development and this momentum helps to make cross-border payments more frictionless, more seamless, more cost-efficient, and make it work out the best for all of you.
And customer-friendly.
And customer-friendly, as Anthony mentioned out. Thank you so much. Thank you so much. All I can say here is that, the trajectory of cross-border payments is headed in only one direction, and that's the upward direction. I mean, that's the best for everyone. Thank you so much, ladies and gentlemen. I want a big round of applause from you for all the speakers out here. Thank you so much. Thank you.
Thank you very much to the panel. It's onwards and upwards from now. May I request everyone to please pose for a group photograph before we exit the stage? Let's have a group picture of all our panelists and our moderator before we exit.